Hey everybody, I've got your Edmonton housing market update for March 2025, looking at the most recent statistics available from the Realtors Association of Edmonton. So that's using the February stats. We're going to look at the market as a whole, detached homes, including 1-story and 2-story homes, half duplexes, row houses and townhouses, and apartment condos. So we're going to dig into each so you can see exactly what's happening with each of those market segments, including, is it a buyer's market? Is it a seller's market? What's happening with prices? Where are things going from here? So lots of detail that we'll be going through in this video. Let's jump right in. All right, let's talk about the market as a whole. When I'm looking at total residential, that's basically mushing everything together in the Edmonton real estate market: apartments, townhouses, detached homes, half duplexes. It's basically putting the totals of everything together. It's a good overall view of what's generally happening in the market, but it's not quite as useful. If you're looking at townhouses, it's better to look at the townhouse data. We're going to get into that later, but let's start with the market as a whole. The absorption rate for the market as a whole is sitting at a 42.04%. And just to explain what that means, that's basically the percentage of the active inventory that's selling in a given month. You can also use this as the months of inventory calculation. It's the same thing, just a different way of presenting the data. In my reports, I use an absorption rate. That's been pretty close to where it's been at for the last 4 or 5 months. It's moved a little bit here and there. Technically, it's down slightly from January when we were at 44.54%. But the important takeaway here is what that means for you if you're buying or selling. So if you see here on the left, you can see that we've got buyer's market, balanced market, and seller's market. So based on that absorption rate, we can make an assumption about what the general market dynamics are like. And if you've got an absorption rate between 30 and 50%, you're in a balanced market. Since we're at 42%, we're right in the middle of a balanced market. Now, what does that mean? If it's a balanced market, typically that means that there won't be huge favor for either buyers or sellers. You're going to get reasonable negotiations with not one side feeling like they've got all the cards and the other side feeling like they don't have any options and kind of have to just go with things. So generally, you could say it's a more fair market, but since this is looking at the market as a whole, it's not going to apply to all market segments. So when we get into other market segments, you'll see that some of them are actually more in sellers markets and some are still in buyers markets. So that's kind of what that all means, and it's been relatively stable here for a while. Now, average price for the market as a whole was sitting at $422,257. That's up 0.32% from last month, and it's up 10.96% from February of last year. Now, if you look over on the right here, you'll see the 13-month history. So you see a fair number of ups and downs over the course of the year. That's normal. Part of that's seasonal, because there's certain parts of the year where we're going to see a lot more sales or maybe some higher price sales, and other parts of the year that are slower. But the average price is also not the perfect metric, because if there's a lot of high price sales one month, that can push up the average price. Doesn't actually mean all the homes are up in value. It might just mean that there's more expensive homes selling that month. So later on, we're going to look at what I call, well, not what I call, what is called benchmark prices from the home price index. And that gives you a little bit more accurate idea on what's actually happening with prices. Still helpful to look at the average price, but it's not the best metric. Now, if we look at the average price just over the course of several years, you can see in 2025, the average price is already up 3.79%. In 2024, it had been up 7.58%. And then if you go back to 2023, it was actually down that year, down 4.62%. After we saw all those increases in interest rates, that definitely hurt the average prices. So moving on to the active and sold listings, at the end of February, there was 3,009 active listings, and there had been 1,265 sales over the course of the month. So the number of active listings left over was up 12.91% from the end of January, but that's actually down from last year. So the same time last year, we had about 7% more inventory than we do now. Now, sales were up from January. They're up 6.57% from January. That's normal to be expected as things start picking up after we start to exit winter, or at least feels like we're maybe exiting winter. But the sales were down from last year. So that's what's interesting here. So the sales were down 9.71% from last year in February, but the inventory is also down from last year. Average days on market was sitting at 37 days versus 48 days in January. In February of last year, it was sitting at 49. Quite a bit different in terms of the average days on market. And then market distribution, this is basically what price point properties are selling in. So these percentages is what percentage of the total number of transactions fell in those price brackets for the month. Under 200,000, you had 15.7%. 2 to 300,000, you had 15.2%, and 3 to 400,000, you had 16.7%. And then the largest segment was between 4 and 500,000 with 22.6%. And then there's a bit of a drop there to 16% of the market between 5 and 600,000, and then 7.5% of the market between 6 and 700,000. After that, you drop all the way down to 2.5% of the market between 7 and 800,000, and 1.4% of the market between 8 and 900,000. So now let's take a look at the benchmark prices. We're going to look at the composite benchmark price. I like to look at this more for a more accurate view on what's actually happening with prices. And in February 2025, the composite benchmark price had gone up to 418,200. Right here, I'm showing you a 10-year history on the benchmark price. I like to kind of look at different time frames every now and then just to get a different perspective. And you can see over the last few months, we've actually been seeing a relatively steep incline in prices, which is a little bit unusual for this time of year. Usually we would expect to see that once we're more into the spring market, which now that this is March, we're starting to get into that now. But we saw some pretty big increases just in what was still the winter months. So if that continues, if that trend continues, we might actually see significant price growth over the next few months as well. Everyone knows there's a lot of uncertainty right now, so you got to take that with a grain of salt. Are there tariffs? They're on, they're off, they're on, they're off. This one's on, this one's off. Electricity is going to get cut off. Who knows what is going to happen here? But you got to take all that with a grain of salt. There is a lot of uncertainty in the market, so that's definitely one takeaway you can take from that, is that some people are just not going to make a decision because they're scared and they don't know what's going to happen. But despite all the uncertainty, we're still seeing prices go up. And you can see that we're above the peaks of 2022 here in February already. So let's jump into the next market segment. Okay, so we're going to take a look at detached homes next. But before I jump into the stats, I did want to let you guys know that you can get my personalized help on your real estate journey in the Edmonton area, whether it's Edmonton, St. Albert, Spruce Grove, surrounding communities, including acreages. I do work as a realtor with YEGPro Real here in Edmonton. I've been an agent for over 10 years now, and I'd love to help you, whether you're buying or selling a home, or even if you just want to get some clarity on what's going on. Maybe I can help sort some things out for you. So I do offer free 30-minute strategy calls. If you go to booktrevornow.com, you can basically just select a time on my calendar. There's no obligation, no pressure. We just chat. It's pretty casual, and I do everything I can to help you, whether it's connecting you with the right people that can help you on financing, or even just answering a lot of the questions that you have. There's a lot of moving parts with real estate, and I've got no problem helping you out on your journey. So if you just go to booktrevornow.com, you can select a time on my calendar, and we can hop on a call. All right, so let's jump right into detached homes. So detached homes, the absorption rate was sitting at 41.32%. So pretty similar to the market as a whole. That's again down slightly from January, but nothing major there. This has been relatively stable since like June almost, like it's been in the 40s. You can see if we go back further, in May it was at 52, so weak seller's market, and April last year it was at 58. So it actually was a bit of a, like pushing further into a seller's market at one point last year. Could we see that happen again this year? I certainly think it's a possibility given that inventory levels are down and sales activity is still strong. Average prices for detached homes were sitting at $553,212. That's down 0.32% from January and up 11.99% from February last year. You can see the ups and downs on average price there over the last 13 months. If we look at the average price trends over the years, you can see in 2025, we're already up 5.75%, and 2024 closed out the year up on average 8.42%. If we look at active and sold listings, there was 1,520 active listings at the end of February for detached homes, and there had been 628 sales. So the active inventory is up 15.41% from last month, and the sales are up 6.44% from last month. Looking from a year earlier, you can see that active listings are down almost 11% from last year, and the sales are down 16.6%. So a little bit similar to what we saw as the market as a whole. So we're still seeing prices go up, even though we don't quite have the same sales volume that we did last year. I would attribute that to the fact that there's less inventory. So even though sales are not quite where they were at last year, inventory is not either. So that does help keep the market tight. Now, average days on market was sitting at 39 days in February versus 50 days in January. So shaved off 11 days, and it was 46 days February of last year. That right there, I would say, also helps explain why are prices still going up if there's not as many sales. Stuff's selling faster and there's not as much stuff available. Pretty simple, right? All right, so market distribution, you can see that you're gonna have a tough time finding a detached home under 200,000 because there's only 1.48% of the market there. Between 2 and 300,000, you got 3.78% of the market, and between 3 and 400,000, you got 12.15% of the market. So that segment we've definitely seen move over to the right into higher price brackets. The $300,000 to $400,000 used to be pretty popular, but now it's only 12.15% of the market. And it's not because people don't want to buy detached homes at that price. They certainly do. It's more so that they've gotten pushed up into the next bracket. 400,000 to 500,000 is almost the biggest, almost tied with 5 to 6 with 27.91% of the market. And then 5 to 600K is now the largest segment for the month with 28.24% of the market. After that, there's a pretty significant drop off for detached homes. Even though there's still a lot of homes in the 6 to 700K, it only represents 14.45% of the market. But it is a little crazy to see that that's actually a bigger chunk of the market now than the 3 to 400K range. Now 7 to 800K, you got 4.68% of the market, and 8 to 900K, 2.71. Then 900K to a million drops again, 1.23. Then we look at a 500K range, 1 million to 1.5 million is 2.13% of the market. 1.5 million to 2 million is 0.66. And over 2 million is 0.57. You're definitely considered a high roller in Edmonton if you are buying over 2 million. Okay, so detached homes, we do get the luck of being able to look at 2 different benchmark prices. So we've got separate benchmark pricing for 1-story and 2-story. So we'll start with the 1-story. So this is going to be bungalows, bi-levels, anything that's just got 1 story above ground. If you have a basement, that doesn't count in terms of stories. For 1-story single family homes, February 2025, our benchmark price hit $456,500. So again, seeing a relatively steep incline since before the year even started. If you watched my video last month, I believe I commented on the fact that usually in like November, December, January is when we see a bit of a dip for the year in prices, but that barely happened this year. It just kind of slight dipped for 2 or 3 months, but not even like barely a dip, and then just started going up again. So that is showing that the market has been pretty tight. If things continue like this, we'll probably see more price growth. Again, there's that caveat that there's definitely a lot of uncertainty, a lot of things that could happen with the trade war or other stuff going worldwide. So be open to potential changes in trajectory depending on what happens. Let's take a look at the 2-story prices. So 2-story, kind of similar. The 1-story, you notice that we're like way above the 2022 peak when it was like, I don't know, 410, and now we're at 456. Whereas for 2-story, you can see that we're not that much higher than the peak that was seen in 2022. My theory for this is just that generally speaking, a lot of the 2 stories are newer, bigger, more expensive properties, and they saw a good run up in that 2022, and there's not quite as much upward pressure on those ones because they're already a higher priced property and out of a lot of people's reach, especially for the more expensive units like that are over 500K. But we're still seeing relatively steep increases so far, especially for this time of the year. Again, barely saw a dip in the lower seasonal months of the last few months here. Let's jump into the next segment. All right, semi-detached. So this is basically half duplex market. This is the first one we're looking at that is clearly still a seller's market with a 65.94% absorption rate. That did drop a little bit from January, but it's so high that you're not going to notice that dropped. It still is a strong seller's market. Average price sitting at $426,734. So you can see the average price is definitely lower than what you're seeing for detached homes. That's up 0.99% from last month and up 9.72% from February last year. Averages for the course of the year, 2025 average prices for this type of property are already up 3.44%. And last year we saw gains of 9.11%. Now looking at actives and solds, first thing I want to point out is this is a small market relative to detached and the market as a whole, with only 229 active listings at the end of February, and there have been 151 sales. So whenever we're looking at that absorption rate, it's basically looking at actives and solds and then creating that percentage. And you can see, yeah, if you're selling 151 and there's only 229 active, like you're turning over a lot of that inventory each month. Actives are up 8.53% from January, and the sales were up 2.03% from January. There's not a whole lot of room for the sales to go up when everything is selling so quickly. So I'm sure more sales would happen if there was more of these properties available, but there's just not. Active listings are down 8.76% from February, and this one you can see the sales are actually up. They're up 17.97 from February of last year. So they've managed to increase anyway. Average days on market sitting at 26 versus 40 in January and 42 in February of last year. Market distribution, the king for this is in the $400,000 to $500,000 range with 50.34% of the market. Again, good luck finding something under 200,000 with only 0.67% of the market there. And 2 to 300,000 is 8.72% of the market. 3 to 400K is 24.8, and 5 to 600K is 12.4. After that, you got 1.3 between 6 and 700K and 1.7 between 7 and 800K, and then like literally nothing above that, not even registering. No benchmark prices. So we are going to head into row and townhouses. Row townhouses. So this is also a seller's market with an absorption rate of 65.89%. That's up a little bit from 64 point something in January. You can see over the course of the last year, it's been in a seller's market constantly over the last 13 months. Average price was sitting at $295,224, which is technically down 1.72% from January, but it's up 8.71% from the same time last year. Again, average prices depends on what price point of properties are selling each month, so take that with a grain of salt. We will look at the benchmark price later. Now, if we look at the average prices over years, you can see in 2025, they're already up 5.08%. In 2024, they had an average price increase of 11.26%. Actives and solds, you'll see that this is a bigger segment than half duplexes, but still pretty small overall. Active listings was sitting at 343 at the end of February, and there'd been 226 sales. So active listings are up significantly. They're up 18.28% from January, and the sales are up 20.86%. So they're outpacing new listings. Year over year, the active listings are actually up for townhouses. Even though it's strong seller's market, they managed to actually have a little bit more inventory. So 4.57% increase. Probably not going to notice it. And year over year, the sales are down 1.31% from February of last year. So not a huge difference. Average days on market was sitting at 28 days, shaved off almost 10 days from January when it was at 37, and February of last year was sitting at 43. Market distribution, you will find some stuff under 200K, usually older townhouses. That's 16.22% of the market. Between 2 and 300K is 33.17% of the market. And the biggest segment was between 3 and 400K with 35.59% of the market. After that, there's a pretty big drop off once you get into 400K plus. 4 to 500K was 13.56% of the market, and then almost barely anything between 5 and 600K with 1.21% of the market, and 0.24 between 6 and 700K. So this one we will look at the benchmark prices. So the benchmark prices for townhouses, again, seeing kind of a similar thing going on here. February 2025, benchmark price was sitting at $289,300. This one didn't dip at all in the seasonally slower months, November, December, January. And you could see we're way higher than we were in 2022. This market has really been ripping for townhouses and not showing any signs of stopping at this point. Take that for what it's worth. But as long as the market stays tight like that and people still want to buy townhouses, the prices are definitely going to stay stable and could continue to go up. But let's take a look at the market that's most different from everything else, and that is the apartment condo market. All right, so now we're looking at apartment condos. This market's a lot different. It's the only one that's still technically a buyer's market with 27.81% of the market. It's a weak buyer's market though. It's just barely not reaching balanced market territory. Last month, it technically was balanced market. It was at 30.47%. So it dipped a little bit, but nothing crazy. Average price for apartments was sitting at $213,774, which was up 4.78% from last month and up 23.52% from February 2024. Sounds wrong. So take that with a grain of salt. The benchmark prices will make this part clear, unless there was just a weird month in February 2024 where only cheap apartment condos sold. So average prices for 2025 are up 6.93%, and in 2024 they were up 6.23%. Now, if we look at actives and sales, there was 935 active listings at the end of February, and there'd been 260 sales. I'm used to seeing active listings over 1,000 for apartments, so dipped under 1,000 here. Active listings are up 8.72% 2% from January, and the sales were down 0.76% from last month. The active inventory is down 4.59% from February of last year, and the sales were down 11.86% from February of last year. So we're seeing less sales compared to last year. 49 days on market on average versus 57 days last month and 61 days last year. Huge part of the market still under 200,000, with 56.9% of the market there, and 31.42% between 2 and 300,000, and then a big dip after 300 with 7.66% of the market between 3 and 400,000, and then 1.5 between 4 and 500,000, and 1.3 between 5 and 600,000. Now, benchmark prices for these bad boys is also going up, but it looks a lot different. Like the chart does, it looks a lot different, especially when you go back 10 years. You can see in February 2025, we're sitting at a benchmark price for apartment condos of $202,800. It has also been going on a bit of a steep incline recently, and we saw pretty good gains in 2024, which was kind of the first time in a while, because you can see that they had been going down for like the 8 years before that. The benchmark prices right now in 2025 are pretty close to what the prices were in August of 2018. So there was a pretty long, drawn out, slow dip. I only went back 10 years here, but you can see from January 2015, things were already trending down, and it kind of makes it look like they hit a low and finally in January of 2023. So is this year going to be the year of apartment condos? I don't know, maybe. The townhouses have seen such increases in prices that I would not be shocked if a lot of the people that maybe would have bought a townhouse are now starting to buy apartments. Definitely seeing a turnaround in this market. Might get pushed into balanced market territory again this spring, which could cause some more price increases. This is the market that's been way different than everything else. If you looked at the very first report, that was the market as a whole. If you used that kind of general guidance and applied that to the apartment market, you'd have the wrong idea. So that's why it's important to look at individual market segments. But yeah, the prices have been going up. I know a lot of the buyers that I have, I think this year so far I've sold more apartment condos than anything else, which is unusual for me, but it ebbs and flows on what clients are buying and selling what. But I've seen more sales for that type of product and more interest. Sometimes it's out of province buyers or people moving here. But yeah, we're starting to see some more action in apartment condos. So that's it for your March 2025 housing market update in Edmonton. I hope you guys got value out of the video. Make sure to like and subscribe, and I will see you on the next one.